How do we become a millionaire? Very simply, really. I mean, I'm going to take you through the entire process. So the first rule is when you're dealing about finance, there are lots of people out there who will talk about it. Um, but unfortunately, what you're going to find is that you go through a process where the geologist loves the deal. The banker tells you they love the deal. The royalty company you may have approached also likes it. Family office does, sovereign wealth fund does. But then when you actually go to get it committed, there's no money. And therefore, we talk about having phantom capital where it's all promised. And I'm going through this right now as a project I am working on where I have been promised the capital three times now from a single source, and every single time it hasn't shown up. So let's talk today about where you can get the capital from. So moving to the next slide. Um, There's a huge amount required, 1.7 trillion. Now, I focused on the next one on niobium only because that's one of the projects I'm working on. And 92% of it comes from a single country. And there'll be no new big mines built in the last 50 years. So you'd think that having a new mine would be a simple task. And as we're going to see shortly, that's absolutely not the case. We've also got this lack of certainty right now where everything revolves, let's be honest, around China. And we've got to move away. I mean, it's not to do with being anti-Chinese, but just having a single source, regardless of what you're talking about, is a bad idea. But having a single source of something that's so important becomes a really bad idea. And so everyone is racing to improve the supply. People are, in theory, throwing money at it with wild abandon, especially the US, and we'll come back to that, to try and ensure that supply chains are no longer reliant on China and other parts of the world. Even looking at Brazil, which is a significant source of critical minerals, China has significant influence and also has significant purchasing power in that part of the world. Why the increased demand? You've heard it all: EV, wind turbines, etc., etc. Governments are deploying capital in various ways. You've got the DFC out of the US, UK Export Finance, European credit agencies, etc. They all have their own ideas about what it is they need to finance. And it's quite funny. A lot of them will finance processing, but when it comes to exploration, as someone from UK Export Finance put it at a presentation I went to, they don't want to risk taxpayers' money on exploration. I'm afraid I burst out laughing on the basis that there are other ways that they're using taxpayers' money. And I would have thought that trying to secure domestic sources of critical minerals was better than some of them. But anyway, so let's look at some examples if we could. Next slide, please. So we're going to go through sort of the three areas: exploration, building, and process. And that's really the way through to becoming a mineralaire. I'm going to get my head takes my mouth around that shortly. So how do you get yourself help? Well, you phone your banker, you ask a royalty company, you look at 50-50 debt, but at the end of the day, you've got to go out there and raise capital. At the early stages, it's angel investors, seed equity, grants, which we'll talk about a little bit more, and really down at the grassroots of putting money up to drill some holes. When it comes to actually building, there's a bit more available. Development finance, again, still royalties, using convertibles. Even in some cases, you might find that the companies building out some of the plant will provide credit facilities as well. And then when it comes to the processing, that's where there's a lot of money floating coming in. I mean, the UK government is happy to finance this. NATO has some funds available. The US has funds available, etc. So at that end of the spectrum, it becomes a lot easier. So let's look at a few examples of how we might do this. If so, the first one is a case study, and Sarah will laugh at this one because she knows about it. We're looking at a project up in Scotland, in a beautiful part of the world. I used to live in Scotland many years ago, so I know how beautiful it is. And one of the challenges we're facing up there is not just getting the financing, but making sure that when actually doing the exploration, it is done in a way which is responsible and takes into consideration the environment, the needs of the community, and indeed just looking at how doing the drilling can also expand the knowledge of the area, the land, etc. I'm not going to spend too much time talking about this one because I know that Sarah could talk to you for hours about it and keep it much more interesting than I could do. But it is quite challenging still to find this exploration money. So how are we going about it? They have done a seed equity. We are looking at government grants. Now here we're saying that we're looking for 675,000. What we're also saying, though, to the government in question, why don't we try and develop a process, a set of standards that can be used across the exploration industries in Scotland as we go forward? So they have a model to use to understand how best to explore and also, I can say, exploit their mineral wealth, but at the same time not damage the environment and also ensure that further data is acquired. Now, I think if we go for the next slide, it will pop up the solution. So what we do in this particular case is we look at all of them, quite frankly. The seed equity round, the government grant, convertible note. The convertible note really is a way of trying to get people to put money in at this stage and convert it into equity later. So they have effectively a debt to begin with a interest rate attached, and convert once a inflection point has been achieved at a discount to that level. So almost make an immediate capital gain. It's a way of encouraging people to invest. But the main overrider here still is it has to be done in a responsible fashion. If it's not, we're not going to be able to raise the capital, because people will look at it and say, this is just not going to fit with our strategies in the current marketplace. So we've now done some exploration. Moving to the next slide. Here we now have a question. We're looking at a project in sub-Saharan Africa. This has an interesting background and it causes us all sorts of problems. This was actually originally going to be a uranium mine, which was being financed by the Chinese. The Chinese did not find sufficient uranium in sufficient quantities to make it viable, so basically walked away from it. Jump forward about 10 years, and things like tantalum and niobium, back to my niobium thing, are often found where there is uranium. And in fact, the tantalum and niobium is worth a lot more than the small quantities of the uranium. So now they're reopening and redeveloping the mine. How do we finance this one? Obviously, there is the question of the Chinese involvement, and that causes its own problems. Would I regard that as being part of responsible more raw material investing? Yes, I would these days, because we need to move away from the supplier issues that we've just talked about. And also the environmental and social standards that were being applied by the Chinese were somewhat different to the ones we'd want to apply today. So in this case, there's been significant social engagement. I mean, they've done schools and other things in the area. They are completely sort of transforming the social aspects of the development. They have got finance from regional banks, but it's very expensive. So we're now going, and we were looking to the US to finance it, but unfortunately, as I said, they've been throwing money things left, right, and centre, and the issue there is that a lot of the things they've thrown money at are not working out as they had hoped. I mean, I saw one report that they had acquired rights to minerals in the DRC. The only snag was it was in the part of the DRC that's controlled by rebels, not by the government. So there's a little bit of a problem there. And also they haven't built the railway yet to move the minerals from the DRC to the coast anyway. So they seem to have actually pulled back a little bit in terms of financing. So we're still looking on this one, I'll be honest. But again, the answer there, if I may have the next little slide, is D again. So we're looking really to find European finance to take out the regional bank debt because it's about half the price, and also look for development finance from various international institutions to add to the stack. It's a challenge, I'll be honest. You know, just the place it's in and all the challenges around Africa, we're getting there, and I may have a solution by the end of this week, I'm hoping. So we've now done let's go to the other end of the spectrum. This was a project in which we haven't done, I quickly point out. Um, I'm afraid in South Africa, with all due respect to the NEO in South Africa, the problem we faced here was a greenfield project. It was sitting next to a very large manganese operation with some major international players in it. But their strategy here was they wanted to raise $5 million to get on with it. When I say get on with it, they hadn't really finished all the necessary geological reports. They wanted to start digging and just get on with it. Open pit, prioritizing speed over the production and over responsible minerals standards. So it was a bit of a problem for us, to be quite honest, which is why we haven't done it, because not many investors wanted to really throw capital into this without having proper environmental standards, proper geological reports, even though on the face of it, it looked very attractive. And the fact was, if I may have the next slide, the answer on this one was D. They were, if you like, it almost ended up being what I would call hurt money for them, because they were offering a 2 times multiple on invested capital plus a 2% life of mine royalty, which basically meant in about 18 months you got your money back and you had a 2% royalty for the life of the mine. The NPV is about 13.6 million, 12% over 10 years, as you can see, which makes it a very attractive investment, which I think in a way reflects the uncertainties and the difficulties that this particular project was having. Moving on to the next slide. Now we're into the territory of the good stuff. Because here we're looking at waste in, strategic value out. This is where we really want to be, in my mind, with critical minerals right now, which is taking the stuff that's above the ground, available, it's waste, in some cases it's polluting, it's an environmental disaster. You can go and see piles of what we're talking about, not only here in the UK, but we've had interest from Canada, Australia, South Africa, and a few other countries, all of whom have got piles of coal fly ash or other coal waste products, slag heaps, to put it bluntly. And this technology is to start to extract critical minerals from this waste. So no mining required. It's the process itself is not as great as it could be, but I'm sure will develop over time to get more and more efficient. But it does mean that within a period of about 3 to 5 years, you could end up with a facility producing about 40 different rare earths critical minerals, fully refined here in the UK or in Australia or wherever else, without actually having to dig any holes or anything of that nature. Very profitable because your cost of the feedstock is virtually zero, basically transportation costs, because you're doing the supplier, if you like, which is mostly governmental, a favor by doing some remediation on waste piles. You know, they've not known what to do with it, and now suddenly not only can they get rid of it, but also everyone makes some money out of it, and strategically very important. Circular economy, no new mine, domestic feedstock, ECA backed, etc. That's why this one gets a big green tick. Very difficult to argue with it. It also produces electricity, which can feed into the grids and get carbon credits. I mean, all in all, we have so many revenue lines on this one. Put it this way, the financial modeling on it is probably the most difficult I've ever had to do. But it's worth doing because the end result is just too good, quite frankly, to be true. This is the one which makes you become a millionaire. The other ones will make you weep a little bit, but this is the one. Going back to the Mineralaire thing, 30 years ago, and the Chinese, 30 years ago, I was working in Vancouver and I had a Chinese client. And one day she walked in and she said, I need to invest some more money I've got. We said, how much have you got? She said, about $1 million. This is 30 years ago. How did you make this money? She said, I trade rare earth elements. I had no idea what the hell she was talking about. But that just goes to show that 30 years ago, this was a Chinese individual trading and making money on rare earths when probably every other government in the world wouldn't have been giving it a second thought. So I think that's where their dominance comes from. They weren't just early to the game, they were first by decades. Next slide, please. Oh, and next one, you can just skip that one. So where have we got to? Basically, to say phone friend. So if you're exploring, you phone your friendly angel, family office, seed venture capital, Innovate UK, prospect generators, convertible notes. When you get to the next stage, you're going up a notch. So you're looking at DFC in the US, BII in the UK. They're really good. BII also sometimes for stuff over outside of the UK, in fact, more so outside the UK, as long as you have a strong social platform on it. They're really focused on what will the project do for the local community more than anything else. Then you've got development finance through royalties, offtake linked debt, etc. On the produce side, you really are into fairly easy to get finance. The project finance debt, the big players in the streaming area, Wheaton, Franco-Nevada, etc. So the royalty companies, OEM equity, this is where you've actually got again, as I said, the equipment suppliers taking equity positions as well, and also potentially green bonds. And there are people out there, there's one particular company, if you're doing stuff in Africa and can show that you have green bonds, what they will do is provide you with effectively a sovereign guarantee on it. So it's AAA rated and you can then sell that to institutions. You have to have a level of local debt as well, so they don't do all of it, but they do a nice chunk of it. But again, it has to show an environmental strategy, a social strategy. It can't just be them chucking money at it. They need to show that it is supporting the local economy and the local community, but a very powerful thing if you can get them to do it. Next slide, please. So what are the tests? Quickly through these, because I'm probably running out of time. Yep. Does the structure align long-term incentives? So royalties keep engaged. Again, pure debt. People are just coming in to make some money and get out of it. So probably not. Government backing, signal value. You've got to be careful you don't rely totally on grants and things like that. I've seen projects which seem to sometimes to be more like a vehicle to suck grant money in than to actually do anything. So you've got to make sure that it has a real viability and not just people sitting somewhere in the world taking grant money because they've got a great idea, but never actually goes anywhere. And there are those out there. A bit worried I might have it on my desk at the moment. Um, Improved environmental management plan. Yes, you must have one because more and more people are going to require that, especially if they're buying your product as well. They'll want to see tracing it, etc. And is the feedstock circular purely again going back to the green one that shows that that kind of project is where you can really win. I think that could be my last slide. Oh, so the prize is real. Governments are there. The opportunities are now, but don't just try and raise your finance from a single point. But as I'm trying to emphasize, through all of this, we now need to make sure it is done in a responsible way and not just, dare I say it, certain other countries' ways where the environmental aspects became second to actually just producing the minerals. So hopefully that gave you an insight to how you can raise finance, and hopefully we'll have a few people becoming mineralaires. Thank you.
Fantastic. Thank you very, very, very much for that.